And welcome. You are watching, listening to the Financial Survival Network. I'm Kerry Lutz. Today is September 20th, 2021. Well, so much going on in the world. First and foremost, capturing everyone's attention. 2 weeks ago, you never heard of this company in all likelihood. Now they are at the top of everybody's concern. We're talking Evergrande, which in my opinion was never grand. And they're certainly not too grand anymore. John Rubino's with us, dollarcollapse.com. So, John, what's the deal here? I mean, is this their Lehman moment, or is it just another Three Gorges dam?
Hey, Kerry. Well, there's a bunch of things happening right now, and the most immediate one that is spooking the markets is this Evergrande thing, which is it's a gigantic Chinese real estate developer, which means it's been borrowing crazy amounts of money for the last decade or so to buy up raw land and turn it into apartments, and it's got all kinds of financial arms beyond just building real estate that allow it to take on huge amounts of leverage. And it looks like the leverage is blowing up on them, which is a little bit of a surprise. And, in the middle of a housing and real estate bubble, you would think anybody who's been buying real estate and turning it into housing would be just rolling in dough right now, right? Because the price of everything they bought in the past is higher than it is now. But it doesn't seem to be the case for them. They took on so much leverage that even higher prices in their main assets is not saving them. So they're basically imploding. I mean, they're at the point now where they're giving cheap real estate to their creditors to keep from being thrown into receivership. And it looks like that's not gonna fix them. So,
right. Well,
hey, yeah, I owe you $1 million. Well, here's an apartment instead. And it's not really working. So that is bleeding over into the rest of China's immense real estate sector. So you're seeing a lot of other real estate companies tank, either in terms of their stock price or their bond prices or whatever. They're all having trouble because people are pulling their commitments from these guys or refusing to make more commitments. And yeah, this is the kind of thing that could spread very easily. And China is immensely important for the global economy. So let them have some kind of a crisis, and nobody gets away from this unscathed. This is a Lehman moment, but it's happening in China instead of the U.S. But the global impact could be the same. Where one thing falls and then it knocks down a bunch more dominoes. So, okay, that's one thing that's going on right now. The other is that the Fed is making noises about tapering, which always sends the financial markets into an epileptic fit. At some point, you get a big taper tantrum or a pre-taper tantrum, and then the Fed backs off and promises never to do anything like that again. And so we're kind of in that process right now. We're in that game where the Fed hasn't come in and promised that they wouldn't taper after all. And the stock markets are still throwing their tantrum. I haven't looked lately, but last time I looked, the stock market in the US was down big. And Bitcoin was down by 8% at some point today.
Yeah.
So risk on assets are getting whacked. Gold is holding its own. Last I looked, it was actually up a little bit in the face of carnage in pretty much every other asset class, which is kind of what you would expect. It's not always what you get in these market cracks, but it's what you would expect with a lot of money flowing into safe haven assets and out of high risk assets. But yeah, and then add into it the fact that Biden is not reassuring anybody with his behavior. He's not acting like a guy who's fully in control of his faculties and making good decisions out there right now. For instance, that thing going on at the border where there are 10,000 Haitians under some Texas bridge, and people were taking pictures from drones, and the government banned drone flights around this bridge, not for national security, not for air safety, just because they could, I guess. And so weird things like that are happening, and you add them all up, and it's not a conducive environment for people taking huge risks in financial assets.
Hey, I could not agree with you more. Not to mention the supply chain is still in tatters and shambles. You know what I did? Largely because of you, John, because of our discussions about this, how you can't get appliances. Well, it looks like Home Depot got a shipment in of Samsung appliances. I went there because the other thing is from the supply chain, you can't afford to fix anything. You know, I've got a 13-year-old refrigerator with an ice maker that makes this rocking sound. And it says, oh, you just need to replace the ice maker. Well, that's like 600 something dollars. I said, you know what? I'm tossing this thing. I'm selling them to a used appliance dealer. But, you know, I, I just said I'm replacing every appliance in the house because they're that age where they're going to start breaking. And if I wait longer, they'll be that much more expensive. And it just makes sense to replace them all, you know? There's no point in keeping these things.
Yeah, you know, appliances are a lot like cars in that sense. They reach a point where fixing them costs more than they're worth. And then you might as well just put them on eBay or, you know, do what you did. Plus, the new appliances have a lot of cool features. Did you see those stoves that that heat with magnetism?
Oh yeah,
instead of electricity?
Stoves.
Yeah,
They're called induction stoves. Those are pretty cool.
they
They
are
have
pretty
gas, luckily, so we don't worry about that. But you know, like everything is warranted, and if it's not breaking now, it's going to break. I got the extended warranty on everything, so when they can't fix it, then they just give you the money and they replace it. And you know, you have to do that because the other thing is they'll be double the price the rate we're going next year this time.
Yeah, this is just
Get them.
crazy. You know, we're not used to living with inflation. And so it's really jarring when you need to buy something and it turns out to be way more expensive than it should be. Like I have both of our sons right now are looking for cars for various reasons.
Good luck there. Good luck.
I know. I'm telling them, you know, I feel bad for you right now because, well, and I feel bad for me too, because who's going to end up paying the extra if they can't get a safe car for what they can pay? Of course.
First National Bank of Rubino is
that's right. So
pay for these cars.
I'm covering the inflation premiums on both of their cars. Is probably how it's going to work out. But yeah, this is really unnatural. We've lived a big chunk of our adult lives without any sense that, you know, when you go try to buy something, either you can't get it or you have to pay way up for it. And that's the way the world is now. And it's not as pleasant a world as the one we used to live in. We didn't know we were living in the good old days.
Oh, I knew it.
Yeah.
I've known it. I've known it since 2010. I used to say to you, every day that this system goes on is a gift, because after this global economic system collapses, which is kind of inevitable, who knows what's going to follow? You know, we just have no idea. And 3 square meals a day or 12 square meals a day if you're obese. And, you know, it might not be so easy. Our bodies might actually go back to their original design, which was feast or famine. So you stored up fat, not for the sake of tipping the scale, but because that was energy you were going to need in the future when you couldn't get a meal. You know, we could be going back to this. Imagine if the U.S. becomes like other countries and it's like 25% of GDP to feed yourself. Imagine what that's going to be like.
Well, yeah, and that's kind of inevitable in a way because we've been borrowing to cover the extra expenses beyond that. In other words, yeah, we're beyond subsistence level for most people right now, but that margin that's beyond subsistence level is all borrowed, which means at some point it has to stop. So our lifestyles are going to have to regress by 1/3 or half, depending. And that takes you back to the place where just covering, you know, a roof on your head and food on the table is most of the money that you make. So yeah, people aren't going to be happy. If we think we've seen civil unrest in the last couple of years, wait till everybody's pensions get cut and Social Security doesn't keep up with the cost of living by massive amounts, like by 10% a year. And people with good college degrees are not even baristas. They can't even get those kinds of jobs. It's going to be a very different world. And it's the kind of world that you get when you borrow way too much money. You know, there's nothing mystical, magical, or ideological about any of this. We're just screwing up in the most basic human way of living beyond our means for an extended period of time. So yeah, it's going to be ugly. Hey, Kerry, do we have time to talk just a little bit about COVID? I don't want to get you in trouble.
Yeah, we can talk a little bit about that health issue.
There's just
Health issue.
There's just one stat that I posted a link to today that is astounding. Well, there's a chart that shows the VAERS database, which is a database that the CDC keeps track of when people have an adverse reaction to vaccine. They keep track of that, and they chart it and they break it up by age and everything. But the table that shows a time series of adverse reactions to vaccines is kind of, low for year after year after year. It's kind of background noise. We're vaccinating people, a few of them have bad reactions, and so on, until you get to this year, when it's like a skyscraper in the middle of a small town. That's how big the bar is that shows the adverse reactions for this year. So that is just a terrifying stat. If it's been calculated correctly and displayed correctly and everything, which I'm not completely qualified to judge, but if that chart is real, should be all you need to look at to know kind of what's happening out there.
Yeah, well, I've been watching that issue for a while. It's definitely up. We can't really figure out the data from it. It's not really understandable, but yeah, it's definitely something that's a cause for concern. And look, I mean, I've taken a number of different immunizations over the years, like we all have. And, sometimes you get a little adverse reaction to it, but with this, it could be different. But hopefully we will wind up getting the truth. I wouldn't count on that either, John. You know how that works, but that everything that we've done to keep this party going here is really a negative in the long run. Like you said, it's going to lead to lower living standards, probably people dying younger than they would. We've already seen life expectancy go down before the global health issue. It was heading down from overdoses and bad health and obesity and all of that. Maybe that's kind of the game plan here. I don't know how to describe it otherwise, but I do know that enjoy the system while we still have it, because for us in the U.S. here, it was the best possible system ever. For the rest of the world, well, certain places maybe not so much. Is gold going to finally catch a bid? And what about what's happening with cryptos today, John?
Well, last I looked, cryptos were getting whacked, which is not a surprise, because cryptos are treated like tech stocks by the people who trade them. In other words, they're risk-on assets, which you buy when you're feeling optimistic. And you tend not to buy when you think the world is coming to an end, and so what's happening now is Bitcoin is being sold off. I don't know about the other cryptos. I haven't been looking at them, but I think Ethereum was way down too.
Yeah,
but
they're all down.
Yeah, okay, that makes sense. They all kind of trade together. And when people are scared, they tend to move into things that tend not to be scary. So that's why gold, and I assume treasury bonds are up today. In other words, interest rates are down, long-term treasury bond prices are up. But I don't know that for a fact. I haven't been checking, but that's usually what happens. And so here's when gold takes off, because we're basically replaying a process that has happened a few times in the past. The Fed starts talking about tapering, or some other thing happens that implies that the spigot of easy money is going to be turned down, if not off, at some point in the near future. Risk assets tank, and then the government, in the form of either the Treasury Department or the President or Congress or the Fed, comes back and says, don't worry, we got your back. We're going to, ramp up QE or cut interest rates or whatever. And then risk assets take off again. Gold is usually in that pack when it happens. It goes up along with most other things, because people infer inflation in the future from what the government is promising. And, there's no reason to think why we aren't going to do that again. It's not like any of the guys in charge had the kind of backbone that would lead to putting up with a potential global financial crisis in order to get their financial houses in order. They're just not going to do that. So at some point, and then the question becomes, what's the number? In other words, how far does the S&P 500 have to fall before these guys cave? And I would say 10% is the outside limit of that process. Before the S&P 500 falls by 10%, we will be back in massive QE mode. The government will probably be announcing that they're going to start buying equities directly. Whatever else you can think of, they're going to do it. And that will be great for gold.
Everything but the kitchen sink. And hey, John, you've been reading about, I'm sure you've been seeing it. We both track it. Rising nat gas prices. Right now, they just broke $5, but basically nat gas has been parabolic, especially in Europe, where it's gone up 6 times more or 5.5 times more than in the US. But we were over $5 per million BTUs. This is causing problems because they use nat gas in slaughterhouses in the UK, and it's caused all sorts of problems in Europe, where the cost of Russian natural gas has gone up 600+% in the past year, and it's threatening the European economy. I mean, what do they do about this, right?
Well, okay, two things here. Is this geopolitical, with Putin flexing his muscles to show the world what he can do? Or is it more of a standard supply chain issue like is happening in a lot of other industries? So those are two different things. They're both bad, but they have different implications. And one thing you didn't mention is that natural gas is used to make synthetic fertilizer.
Yes.
So to the extent that that spikes, then food prices go up. Yeah. So and food prices are really the key to civil unrest in a lot of the world. In a lot of countries, when they spin out of control, it's because food got more expensive. And people who were just living on the edge, who were barely feeding their kids, all of a sudden find out they can only feed 3 of their 4 kids. So they have to choose which kid they're not going to feed. And that sends them out in the street, Yeah.
That's crazy.
So, yeah. So this is a bigger deal than just, some obscure power source got a little more expensive here. This hits the food industry, which hits individuals, which makes it way more dangerous politically for a lot of people. So we'll see. I don't know how long it lasts. I'm absolutely no expert in the natural gas market, but to the extent that it's happening at all, before winter, kind of makes you wonder what winter is going to be like in a lot of places.
Hey, the experts in the natural gas industry aren't such experts either. The nickname of natural gas for traders is the Widowmaker, because it's impossible. Of all the commodities out there, it is by far the hardest to trade. And that goes for gold and silver too. It really is, because like right now, it's summer. We should start seeing it. We shouldn't see it peaking in summer. And yet here we are, right? So, yeah, just all the commodity prices up, some of them up 100+%, gasoline up 85%, oil up 70% in the past year, all these things. The only thing you can get a deal on is chocolate, Chocolate's the only substance that's only up 11% since the beginning, because they keep using this fake stuff. So I think there's less demand for it. But I don't know what's going to be here, but probably nat gas will pull back now. But if we have any cold weather whatsoever, I think we could be looking at $7-8 per million BTU nat gas. And that would be, the utilities, electric, not going to make so much difference, because all of their contracts are long-term take or pay contracts. They have to take it. But otherwise, for other things, like if you're heating your house, your home, or apartment houses, or like you said, fertilizer, places where you you buy on the spot, it's going to be devastating, you know?
Yeah, but potentially. Although a few things have started to come back down now. Lumber and iron ore have both tanked lately,
Yeah.
which which means the picture is getting mixed rather than all one way. And who knows how this goes, because there are signs that the global economy is slowing down. The China thing is clearly a negative for China's economy.
Yeah.
And some of the stats out of the US lately have been surprisingly slow. Still not dead in the water slow, but slower than expected growth. So, it's possible that some of this stuff does indeed turn out to be transitory, like the Fed guessed that it would be. But it's still way too early to tell what the longer term trends are here. And I think just based on the amount of new money that we're creating and throwing into the system, that there's a good chance that inflation picks up from here. In other words, there's a good chance we're kind of sort of in the 1970s again. In which case, look out, because it was the last few years when things went absolutely crazy in that decade. And we're creating conditions that look an awful lot like that. So, if you bought silver halfway through the 1970s, you were rich by 1980. And this has the feel of something very similar. So I wouldn't wish that on anybody, because the 1970s were a really unpleasant decade, a really dangerous decade. But if we're headed that way, some of the things that worked were precious metals.
Absolutely. And you and I actually remember the 70s, which most of you out there probably were children or not yet born. But it was a really bad decade. Then it gave way to Reagan in the 80s. I don't know who the next Reagan is. I know who isn't the next Reagan, that's for sure. Well,
Kerry, see, the thing is, we can't have another Reagan or another Paul Volcker at the Fed this time around, because those tools that they use don't exist anymore, or they exist, but they can't be used because they would be so destructive. Raising interest rates to 20% to stop a declining dollar would just blow up the world. So we can't do that.
Oh.
And so picture the 1970s, but with no way to stop it. In other words, picture interest rates still pretty low heading into the 80s and inflation still raging. And then you get kind of what we might have. What do people do when they realize that, this has been going on for a while, but the trend isn't going to reverse. There's no way to fix it. It's only going to expand from here and accelerate. That's a prescription for panic in the financial markets on a vast scale, something we haven't, even people who remember the 70s will be surprised by the extremes that a lot of pricing goes to.
Hey, so, that's the thing. And that's why you need to have a plan, even though, as we know, a plan, as Mike Tyson says, is great until you get hit in the head. But if you don't have a plan, you're going to have no idea what to do. And I would advise, I think that I don't think cryptos are going down to zero. I think they will have another run up, honestly. But I think they're going to get driven way down now because they broke a key technical point. They broke their resistance points, and we could see them test that low. And if they break the low of 35,000 Bitcoin, we could see them go into the 20s. I warned people about this. This is why nobody quite understands their reaction to these forces that you're outlining. And hey, I love the concept of Bitcoin. They aren't making more of it. It's like oceanfront real estate to a large extent, waterfront real estate. They're just not making any more of it. But then again, if California falls into the ocean, there'll be a whole bunch of other states that are very desirable because there'll be waterfront property, right, John? So, I mean, you just don't know what's going to happen is the point, which is why sticking with the tried and true, the proven, probably could be your best bet. In any event, make sure you go over to John's site, dollarcollapse.com. Check out his writings. They're very important and instructive. And sign up for his free newsletter as well as ours on financialsurvivalnetwork.com. If you got a question for John, shoot it off to me, KL@kerrylutz.com. John, we'll talk to you next week. Be well.
See you, Kerry. You too.